Hi, I'm Jason Wagner, the farm lawyer. I work with family farmers every single day to help them pass the farm on to the next generation. At my law firm, Wagner Ayler, we've been doing it for over 50 years. I want to talk again about some 1031 exchange rules today, especially, what happens if you miss that 45-day window that you have to identify your replacement property. Check out this video to learn more. So what happens if you miss the 45-day rule? Have you heard somebody say, well, I just want to sell this property, then I'm going to take my time and then decide what I want to buy? Well, that doesn't really work so well in a 1031 exchange. There's a deadline that trips people up more than almost anything else. And if you miss it by even one day, your entire exchange can fail. So the 1031 exchange is one of those areas where the IRS just doesn't give you much grace. The whole 1031 exchange itself has come under attack and been narrowed over the years. So, we don't want to mess this up. But it is a misconception. We're going to sell first, start looking. Hopefully, in a good situation, no, we don't want to do that. That's a little bit backwards because the moment your sale closes, that clock starts running. And one of those clocks is the 45-day window where you have to identify. So what actually happens? Well, within 45 days after selling your property, you have to identify in writing to your intermediary the property or properties you intend to buy. Not really thinking about, you have to put it on paper. We're not looking, we're not gonna talk to our spouse about it. We have to actually identify it according to the IRS rules. And if you don't do it within that window, your exchange will fail. So here's where I see people kind of get into a little bit of trouble. Let's say you sell 80 acres in June. If you're thinking, well, I want to wait until harvest time, maybe there's going to be some more farms that come up on the market. We'll wait and see what happens. Well, the IRS doesn't really care when the right farm comes up for sale. It's a 45-day window to identify. That's it. And if you haven't identified replacement property, you've lost the benefit of the exchange. So that's why I like to tell clients, if you're thinking about doing an exchange, start thinking about what you want to buy first. You should have a pretty good idea of what you want to buy before the sale ever happens. I mean, if you wait until after closing, that's going to create some pressure. People might be buying property that they didn't really want to buy. Maybe this ground's too wet. It wasn't really what I was thinking of. It's not what I wanted. It's too far away. I will be honest with you though, even in those cases, I'd be hard pressed to just pay the tax rather than finding something that'll work to defer the tax. Just my personal opinion, but a 1031 exchange is a great tool. We always want to be looking ahead of time if we can, but even if you haven't found something by the end of that 45 days, there are a lot of other options out there too that we can talk about. But you also have to think going into it, who am I selling this to? Am I selling it to somebody that maybe I've known a long time? Maybe they've rented this property. Are they going to be, friendly to me where maybe we can put something into the purchase agreement that gives us a lot of flexibility on the closing date, because that's what triggers that 45-day window. So if I know that I'm going to be doing an exchange, maybe I want to let my buyer know, hey, I want to be flexible on the closing date. We can write that into the purchase agreement even, is that maybe we'll have a closing date set for, say, January 1st, but I, the seller, could extend that an additional 60 days to give me some more time to look. Now we've got 60 days plus 45 days. Maybe we've got over 100 days now that we can extend that by controlling the closing date. Of course, as I said, this does depend on who your buyer is, because if they're using your property as a replacement, you could be bumping up against their timelines. So, sometimes these things we do have to be careful about that too. But it's always something to look at. And it's not that uncommon, at least when I work with clients. We really look at how can we control that closing date to make sure that the exchange is going to be as successful as possible. So the people I work with that have the most successful exchanges, we're not scrambling at the last minute. We're planning ahead, talking with the attorney, talking with the accountant, working with the qualified intermediary, and we're looking for that replacement property before we get to the closing table so that we know going ahead what we're going to be purchasing. Because if you get to day 46 and you haven't identified in writing the replacement property with your qualified intermediary, that's it. Your exchange is done. You get your money back, you pay your taxes. Usually not what you want to have happen. Why'd you start the exchange? So if you want to learn more about protecting your farm, reducing taxes, planning for the next generation, and potentially doing a 1031 exchange, subscribe to this channel, check out farmlawyer.com, or give us a call at 507-288-5567.